Hey there traders, you're looking at a chart of the S&P 500 on the daily time frame for March 11th, 2024. I wanted to share with you how this simple stock and options trading strategy I use every day yields significant gains day in and day out, and how you can do it too, whether you're a seasoned veteran pro trader or a novice just getting started. We'll get back to the S&P 500 in a minute though. The trade of the day today was AMD. Let me show you how my AMD stock options trade went on Friday. First off, and this goes without being said, if you trade stocks or options and don't use a chart, you're at a huge disadvantage, and you'd be better off just giving the money to the Salvation Army, or if you want to have fun losing all your money, try going to Vegas. But if you want to have fun making money, then set your time frame to the 3-minute chart. Then, place 3 moving averages onto the chart. The 21 EMS, the 50 SMA, and the 200 SMA. So, as you can see from the chart, AMD stock options low of day was 1.43, where our order filled on Friday and quickly shot up to as high as 12.50 in the first hour of trading. Take a look where the top of the candle is in relation to the 21 EMA. Price is far above the 21 EMA, and as tempting as it is to let FOMO kick in, rule number 1 is never, but when the price is far above the 21 EMA, never, not sometimes, not once in a while, never, wait for it, because price will always come back down to the 21 EMA on your 3-minute chart of the SPY, or in this case, AMD, or any other ticker you're trading, whether it is stocks, options, commodities, or crypto. This trading strategy works with any stock ticker, so with the AMD price sitting on top of the 21 EMA at the open, which is home base, also the 50, 200, and the 21 EMAs were all tightly together, with the MACD already firing our first buy signal of the day. So we get in, which is near our 21 EMA, take note of your 3 moving averages. Remember, this is rule number 2, write it down. If the moving averages are all pointing up and the 21 is above the 50 and the 50 is above the 200 EMA, you only take long trades. So Friday, the first candle of the day was a green power candle. Or is it? If it's a power candle, it will have follow through, meaning that there will be another powerful green bar printing after the first one. But that did not happen, and short-term profit takers printed a small red doji. If you're quick, you might want to scalp puts when the next red bar takes out the previous red bar as it heads lower. But the problem with that trade is it violates rule number 2, that if the moving averages are all pointing up, you only take long trades. So Friday, I waited. My favorite setup is when the 3 moving averages are all squeezed together, and in the right order like they were on Friday's open, 21 above the 50 and 50 above the 200, and all pointing up. Price came down to the 50 and started printing long wicks at the bottom of the next few candles, showing that bulls were taking the ball back away from the bears. Red candle prints a long lower wick. Next candle is a green doji, signaling a transition as bulls and bears fight over who has the ball. Next candle is green again, and this one has a long green wick at the bottom of the candle, telling us that the bears push price down, but the bulls were able to overtake the bears and drive price even higher. Bulls were stronger than the bears and were exerting their dominance. Once price crosses back above the 21 EMA, boom! You go long and place your stop under that candlestick. If price gets back below the low of the candle you bought in on, you stop out. Simple. One candlestick is your stop, period. Now look, so AMD crosses back up over the 21 at 9:31 AM and just rips to the upside. The calls are now going for 300, which is more than double just 5 minutes into the trade. And now I see that price found support on Friday at the 50 SMA, so the 50 now becomes a trailing stop. However, because the parabolic run is so strong and the options are paying out, I set my sell order for 550% gain. Now, look how the moving averages start to separate my trailing stop, because my candlesticks, when they start to print long wicks, that's my telltale sign the momentum is waning. Also, keeping an eye on the 21 EMA, as long as my candles continue to close above the 21, you stay long. So, by 10:30, the candle tops are far away from home base. the 21 EMA, and that's where we would take profits, but we got out early as AMD is at this point seriously overbought. More on that later. With the call options going from 1.43 cents to 8.45, but reaching as high as 12.50 for a 10-bagger, boom! Now, let's head over to SPY and see what's going on there. No matter what you're trading, you want to keep an eye on SPY. Price always comes back to home base. Not if, but when. Now, when price comes back down to the 21 EMA, you don't buy the first touch. Instead, you wait for the second bounce, which is often a bear trap as price candles slip below the 21 EMA. Bears think price is coming back down, and boom, that's our buy signal. When the next green candle overcomes the previous red candle, when green overtakes red and price doesn't come back down to the 21 EMA, we take profits when a red candlestick takes out a green one and price is far away from the 21, home base. And boom, that's when you close your position and wait for your next setup. If you would like to receive our trade alerts in real time as we make them, be sure to check the description below for our Patreon link where you can sign up and get our trade alerts as they happen in real time every day. Now, if this video resonates with you, take a moment to leave a comment below and share this video with your friends and colleagues and family, and don't forget to like the video. Until we meet again.